Going to talk about the stock market. What is going on with the stock market? Well, as far as the stock market is concerned, they are expecting more pain in the stock market. As you know, we have inflation going on, we have high interest rates going on. So they don't expect for it to recover uh, anytime soon, which is the worst since 1970. So S&P 500 down 18%. Vanguard Total Bond Market Index Fund down 10.8% as of today. So I want to talk to you a little bit about stocks and bonds. So some people do not own bonds. Reason being is that if you own bonds, your money is going to grow slower. So some people have mostly all stocks, not even what is, because when you hear recommendations of having owning partly stocks, partly bonds, partly international funds. But the truth is if you own bonds, your money is going to grow slower. So just want you to realize that, and then whatever you decide is up to you, it's your choice. But I do want you to realize that owning bonds is going to make your money grow slower. So, like I said before, S&P 500 is down 18%. And then the Vanguard Total Bond Market Index Fund is down 10.8%. And so this is the worst since 1970. And this is what is going on currently with the stock market. The stock market is doing horribly. So there's been sharp falls in stocks. But in history, these sharp falls in stocks, they end up being a rebound with the increase, steep rebounds. So in the past, when the market was down 15% for the first half of the year, like the first 6 months of the year, then the final 6 months, the last 6 months of the year, the average return has been nearly 24%. So it's been a history of going down when it goes down 15% the first half of the year, and the second half of the year going up 24%. That is according to history. And so, what we are currently going through is stagflation. You may have seen the term stagflation all over the news. And so, stagflation is a slowing or stagnating growth with high inflation. So, that is where we're at right now, stagflation, slow growth, high inflation, and they are expecting a coming recession to happen. And so, as you know, the stock market is something that we can't control. You can't control whether the stock market goes up, whether it goes down, whether it's doing good, whether it's doing bad, because it depends on so many factors like the war, the COVID, what the Feds plan to do. It depends on so many different variables. So, as you know, we can't control what the stock market does. That is why some people choose not to be in it. They don't trust it. So you can't control the stock market, but what you can control is, are you going to buy some rental property? You can control that. Are you going to work on starting a business? You can control that. So the good idea is to do the things that you can control. You can control owning property and you can control starting a business. So, a little bit how the stock market works and why it's a good idea to be in the stock market is there's something called compound interest in the stock market. So basically, if you put in 20K a year for 15 years, you will be a millionaire. And you're putting in way less money than what you're getting out because of compound interest. That is the reason, a good reason to be in the stock market because of compound interest. Your money is making money for the simple fact that it is in the stock market. 20K a year for 15 years, you will become a millionaire. And if you don't want to wait 15 years, you want to become a millionaire sooner, then you would put more money in. So that is how the stock market works. It is compounding. Your money is making money on its own. You're putting in way less than $1 million. You're putting in 20K a year for 15 years and you become a millionaire because of compound interest. That is the reason why it is a good idea to be in the stock market, regardless of all the negative news that you hear around the stock market. And this is why you see um, little 30-year-old people walking around who are millionaires. They had this information when they were 15 years old. Putting in small amount of money, letting it compound over time is how you generate wealth. The stock market is a wealth creator. You can choose to be in it, let the compound interest work for you and become wealthy, or you can choose to stay out of it because you don't trust it, because there's so much negative news around it, and a variety of other reasons. But I just wanted to share with you a little bit how the stock market works as far as it pertains to choosing to own stocks only, stocks and bonds, stocks, a little bit of bonds. Like I said, if you own bonds, your money's going to grow slower. It's a personal decision. And then knowing that you're putting this little bit amount of money in, but the fact that you're putting it in over a long period of time and that compound interest is working for you, that is how you accumulate wealth. And this is not taught in school. Either your parents teach you or you're going to teach yourself. But there are, like I said, 30-year-olds walking around talking about they are a millionaire. And that is because they know about this thing called the stock market. It's a little bit of money over time, compound interest. And you can go with this 20K a year, get there in 15 years. Or, like I said, if you want to get there faster, you put more money in. Some people are putting in twice as much money. Some people are putting in less money. But the fact that you put it in and you do it consistently, regardless of all the negative news that's happening around you, that is how you build wealth. So stay the course. Also, do the things that you know how to do to build wealth. And that is so that you're not just depending on one thing. So work on building businesses, work on buying property, create side hustles, whatever it is that you know how to do to generate money is a good idea. So that is what is going on with the stock market. Currently, it's doing horribly. It's all over the news. And the stock market, it rebounds. It has always rebounded in history. It's going to take some time to rebound. And like I said, you don't depend on one thing, you diversify into these other things that are within your control because the stock market is not within your control. And then you could either choose to retire from your income from the stock market, or if you're into rental property, you could choose to retire even sooner because instead of relying on the stock market compounding, you could live off of the money that comes from your rental income. And that is a different way on how people choose to retire. They choose to retire by living off of the cash flow of their rental properties. And so that is actually faster than the stock market. But it's a good idea to do it all so that if one goes down, the other one is there. So that is a good way to protect yourself is by diversifying. So this show is sponsored by my company, which is called Elevation Mentor. And what I do is I help you to get your first rental property. So if you're interested in owning property, you can reach out to me. My email is info@elevationmentor.com. Also, I am going to be in a play. So if you are in the area and you would like to have some fun, come out and see me. I'll put the link in the bottom. And if you're interested, you're invited. So come on out and see me and have some fun because we want to be well rounded. We want to enjoy life, not just talking about money and um, you know, be well rounded, have some fun, enjoy life. So this is the Love and Money Show. If you like this show, please share it with one other person. Also, hit the big red subscribe button and the notification bell next to it so you won't miss an episode. Also, hit the like button, it helps the channel, and leave your thoughts in the comments. Thank you for listening. Have a great rest of your day.